The Canadian dollar extended its winning streak against its U.S. peer in the middle of the trading week, even with zero domestic economic data. The loonie is finding most of its support from soaring pre-CES among energy commodities, assets that are trading at their highest levels in more than a year. Will the loonie strengthen below 1.25? March West Texas Intermediate, WTI, crude oil futures surged $1.38, or 2.24%, to $63.05 per barrel on the New York Mercantile Exchange. March natural gas futures slipped 2 cents, or 0.66%, to $2.86 per million British thermal units, BTU. Crude prices are raw. Why? Despite the U.S. government reporting a larger than expected increase in domestic inventories. Market observers had penciled in a supply withdrawal, but stockpiles increased instead. Since Canada maintains a current account deficit, exports are critical to the national economy. Oil and gas are the nation's top shipments, so any price change can have an impact on the loonie and the broader economy. Last week, Statistics Canada reported that retail sales plummeted 3.4% in December, worse than the market forecast of -2.5%. This was down from the 1.3% gain in November. On an annual basis, retail sales climbed 3.3% in the final month of a tumultuous year. The inflation rate was higher than what economists had anticipated. The Consumer Price Index, CPI, advanced 1% year-over-year in January, higher than the median estimate of 0.9%. The Canadian bond market was mostly in the green midweek, with the 10-year bond rallying 0.074% to 1.319%. The one-year bill dipped 0.03% to 0.145%, while the 30-year bond climbed 0.057% to 1.91%. The loonie has recorded impressive gains against the U.S. dollar so far this year, climbing more than 1.5%. Over the last 12 months, the Canadian currency has soared 6%, despite sliding in the first half of 2020. The USD-CAD currency pair declined 0.41% to 1.2537. From an opening of 1.2588, at 17:10 Greenwich Mean Time on Wednesday. The Euro-CAD dropped 0.47% to 1.5224, from an opening of 1.5295.